So, very warm welcome. You're watching Market Cafe. This is Priyanka Uppal along with me, Shriyansi Sa. Next 1 hour, we're going to set you up for the trading day today. We get you all the global cues and the top stocks and the action that you need to know before you get ready for your trading day today.
Well, absolutely. And firstly, good morning, Priyanka. And let's start by looking at Wall Street. Then Wall Street is coming off a mixed trading session. The 30 stock Dow rose more than 228 points, or 0.5% thereabout to close at a record high. So those were the kind of levels that you saw coming in for that there. It was a largely mixed handover coming in, because when you take a look at the S&P 500, you do have gains of about 0.1% thereabout. Nasdaq Composite lost about 0.5%. So those are the kind of moves that we're looking at now. Investors, of course, on Tuesday will be passing through retail sales data for August for one final glimpse into the health of the US consumer ahead of the Fed rate decision, and that's the one that we've been watching out for. And the Wall Street really is on standby for the Fed's long-anticipated rate cut, a move that could, of course, help boost earnings growth for companies following a backdrop of steep borrowing costs as well as high inflation. So that really is something that we're really watching out for. And the Fed first embarked on its aggressive hiking campaign in March 2022. So it just does remain to be seen what really happens in terms of what the Fed does. Now, traders are currently pricing in a 67% chance that the central bank will be easing rates by 50 basis points. So it's just what is currently being penciled in. And in other economic news, of course, you do have industrial production as well as manufacturing production data that is due out for August, along with September's National Association of Home Builders Market Index as well. So that is something that we're all watching out for. When you take a look at the European markets as well, European stocks closed lower as investors passed for that bumper week of interest rate decisions from the US Federal Reserve as well as the Bank of England. So that is really something that we're watching out for, Priyanka. But what is really the picture that is shaping up in oil?
All right. Well, oil has been the key news to track on. Oil price has climbed nearly 1%, but the news is not good here also. It's on the reason behind the price rise is hurricane impact, and that to be ahead of the US rate decision. So that means crude, which was already consolidating at lower levels, some respite has come in, that in sense of the oil prices have climbed in nearly 1% on the Monday, and that was because of the ongoing impact of the Hurricane Francine and output of the US Gulf of Mexico, which is offsetting the persistent Chinese demand concerns. So there has been concerns about the fears of slowdown across the globe, US, China, and that's what has kept the oil prices in check. In fact, that was consolidating at lower levels only. But then not a very respite news, because of course that's the another tension which seems to be coming in because of the crude, which is what we saw, that it has risen 1%.
Well, absolutely. That really is the handover that we're seeing shape up for the oil markets. Let's take a quick look at gold as well, because prospect of big Fed rate cuts is also keeping gold at record levels, and those are the kind of levels that we're seeing. So in terms of price levels, 2,580 is where gold is at. So that largely is the handover coming in from oil as well as gold. But let's take a quick look at global cues then. And when you take a look at cues coming in from the US, then you have the Fed meet that is beginning from today. Like we've told you time and again, that is the one that we've been watching out for. And there's business inventories data as well as industrial production and retail sales data from the US. So that is the one that we're watching out for. From Japan, there's tertiary index activity data as well. And in terms of other events, host of other events to watch out for. PM Modi will be visiting Bhubaneswar, and that's the one that we're watching out for. And the Supreme Court will be hearing the suo moto case for the Kolkata rape case, and that is the one verdict, and that is the one commentary that we're really watching out for. And there's BCCI settlement as well. Now the Supreme Court will be hearing Baiju's case, and beleaguered Baiju's has been in the spotlight. So any commentary coming out of that judgment and that verdict from the Supreme Court will be in the spotlight as well. And Kejriwal will be resigning as Delhi Chief Minister as well, and that resignation, of course, has been in the forefront, and that has been in the spotlight, Priyanka.
All right, that has been the key news coming in from the nation, but then let's get you more news and sense of what are the key economic indicators that one needs to understand as far as global cues are concerned. And the big talking point this morning is the US dollar that slumped to a more than 1 year low, following increasing bets on an outsized rate cut from the Federal Reserve. Remember, the central bank has been widely expecting to begin their rate cut cycle with a 25 BPS cut at the conclusion of its September meet, but reports have sparked speculation over an aggressive 50 bips cut. On the back of this move, the rate-sensitive tech stocks slipped, causing the Nasdaq to underperform.
Well, absolutely. And let's switch focus to the yellow metal then. Goldman Sachs has reiterated its optimistic outlook on gold prices, citing central bank demand and the imminent interest rate cut from the US Federal Reserve at its policy meeting this week. Remember, prices rose to an all-time high at $2,589 an ounce, supported by a weaker dollar and the prospect of a big rate reduction. Now, the brokerage firm has also reiterated their target of $2,700 per ounce by early 2025. So that's what they're really penciling in. Let's also go across to my colleague Ashesha, who's standing by, who'll put all the pricing activity into perspective. Ashesha, over to you.
Continues to touch all-time high levels for the second consecutive session. In fact, on Friday also it touched all-time high levels, and it has crossed that $2,580 per ounce mark, and what a rally it has been. On a year-to-date basis, gold is now up nearly 32% and in the last 1 month alone, we have seen gold rise by about 3.5 to 4%. Buying by central banks globally, softening US dollar, and apart from that, of course, we have that all-important Federal Reserve meet on the 17th and 18th of September, and hopes of a 25 basis point rate cut is also leading to the rally in gold. And apart from this, high demand in the O2C market of gold is also leading to the surge. In fact, Goldman Sachs believes that the run-up is expected to continue. Even after the run-up that we have seen over the last few days, they expect $2,750 per ounce is the target that they've given for early next year. It continues to be their preferred long-term bet, and it also is a good hedge against inflation and economic uncertainties that the world is facing. So yes, a positive report that has come in from brokerages, and gold continues to scale past that $2,580 per ounce mark.
All right, all that glitters is actually gold. That's what the gold prices have to say. But where are gold prices headed to, and how will this surge impact demand for gold on the ground? We caught up with Nitin Kedia, who's the National Secretary for All India Jewellers and Goldsmith Federation. Let's listen in what exactly he said.
Higher prices, they always impact the demand badly, and in recent days we have seen that once the prices crossed 70,000, there was some drop in the demand, and the result is that now we are seeing that there is some discount in the spot prices when we compare it with the import, and the demand which was higher after the duty cut, now that has gone totally, and as of now, after this Ganpati festival, most of the jewelers are sitting idle.
Alright, that's some key commentary coming in when it comes to gold, but let's shift focus to some stock-specific action. Then the Biden administration has awarded Intel with an additional $3 billion under the CHIPS and Science Act for the Secure Enclave program. Additionally, shares of the tech giant also soared 8% in extended trade after the company announced it's creating a separate entity for its foundry business, which could allow it to raise outside funding as well.
All right. Meanwhile, plane maker Boeing has announced cost-cutting measures, including a hiring freeze, a pause on non-essential staff travel, as well as a reduction on supplier spending to preserve cash at its deal with a strike by more than 30,000 factory workers. In a staff note, company's CFO said that they will make a significant reductions to supplier spending and stop most purchases order for its 737 MAX, 767 and 77 jetliners.
Alright, moving on then, and among other important announcements, global retail giant Amazon is now instructing its corporate workforce to function from office 5 days a week. Previously, the company required its employees to be in the office at least 3 days a week. Among other efforts, the retailer is also flattening its corporate structure by having fewer managers in each organization.
And tech giant Microsoft has approved a new share buyback program of up to $60 billion. Remember, they had declared a quarterly dividend of $0.83 per share. That means reflection of nearly 8% or nearly 10%. 10% increase over the previous quarter. Important note here is that the big tech companies, including Microsoft and Alphabet, are facing investor pressure to show a payoff for the billions of dollars they have been investing in AI infrastructure.
Alright, shifting focus to China, then Goldman Sachs and Citigroup have lowered their full-year projections for China's economic growth to 4.7% after the world's second largest economy's industrial output slowed to a 5-month low in August. Weak economic activity has ramped up attention on China's slow economic recovery, also highlighted the need for further stimulus measures to shore up demand. Goldman Sachs earlier expected full-year growth for the economy at 4.9%, while Citigroup had forecast growth at 4.8%.
We stay for a short break here. More to come on the other side of the break. Don't go anywhere.
Welcome back. Thank you so much for staying tuned in. Well, let's take a look at the Asian markets then. And most Asia-Pacific markets that are open today are mixed, following a mixed trading session on Wall Street as well, as investors are really preparing for that Federal Reserve meeting to kick off its monetary losing cycle as well. And the Fed is largely expected to announce its first interest rate cut since March as well. Now, when you take a look at some Asian markets that will be closed for the Mid-Autumn Festival, you have South Korea making it to that list along with mainland China as well as Taiwan. But let's take a look at Japan's Nikkei then. That is the one that opened lower and currently is down about 1.3% in trade on your screens as well. Let's also take a look at Hang Seng on the flip side. That one is in the green. So not a good amount of gains coming in for the Hang Seng, but about 0.7% uptick coming in there as well. ASX 200 as well in the green, but not much of a move coming in there. 0.3% uptick is what we're seeing for ASX 200 as well. And that largely is the mixed handover that we have from the Asian indices this morning as well. Back home, of course, we close around the 25,380 levels. And currently what is largely being penciled in terms of what the Nifty implied is indicating is a rather muted start is what we're looking at. But let's see how that pans out for us, because we did open at record high levels yesterday for the Nifty as well as the Sensex. So let's really see how that really pans out for us this morning. Welcome back. Thank you so much for staying tuned in. Well, let's get you some more news and updates then. And the SEBI has cut down the time taken for transfer trading of bonus shares as well. SEBI announced that the bonus shares must be credited and be ready for trading within T+2 days. In fact, my colleague Ankur Mishra is standing by with those important details. Ankur?
Yes, market regulator SEBI has specifically fixed timelines for credit of bonus shares. Remember, last month there was a consultation paper which was issued by SEBI for fixing the timelines, because currently there is no specific criteria for the same, and it may vary from week to 2 weeks for crediting of these bonus shares. Now SEBI has mandated that bonus shares will be credited with ready for trading within T+2 working days. That means that if T is the current day, within 2 days these shares will be credited. Now how will this happen? The issuers must apply for in principle approval within 5 days of the board meeting that approves the bonus issue. In fact, the stock exchanges will notify the number of shares and the bonus issue within T+1 day, and that credit of bonus shares must be insured to the depositories within T+1 day, and that should happen at 12 p.m. Now after that, bonus shares will no longer be credited to temporary kind of ISIN. In fact, permanent ISIN will have that bonus share, so that effectively within T+2 days the bonus share is credited to the account. Now this is first time where a specific timeline is fixed for allotment of bonus shares, and these guidelines will be applicable from 1st of October 2024.
The timelines are a year only. That means first the traded shares, and now the bonus share will also reflect on your account much ahead of the time. Moving on, luxury car makers are adopting new models to increase sales with a major focus on the upcoming festival season. Germany luxury car maker BMW Group has launched the Retail Next. That's the new idea for its new dealerships. ET Now's Sumit Chaturvedi caught up with Vikram Pahawa, President and CEO for BMW Group India. He also spoke about the car makers' India plans going ahead.
For us, the demand is still solid. I mean, there was a space of time in between during the election period that we saw a little bit of a kind of a pause or a slowdown, but that's expected at every election, every time it happens, every 5 years, we know that. But it's coming back now with the festive season. We can see the demand coming back. You saw that we launched 3 great products only a month ago, the 5 long wheelbase and 2 of the new mini generation family vehicles. Great demand on those, great order bank on those, and the deliveries are just starting now in the festive period. So for me, it's still a very confident environment. I don't see any fundamental reason why the demand in India should slow down, right? Because fundamentally, the economy is growing, the confidence of customers is good. From a world perspective, we are standing much taller than any other country right now, and I expect our figures to be a solid growth this year as well, like we have been doing last 2 years.
And globally, where all is this being followed?
It will be rolled out globally. I mean, and India, like I said, is one of the first market that is having a good lighthouse project. So in India, we'll be transforming all our facilities till 2026. All the 56 facilities that we have planned for that period will transform into this kind of an environment. And our dealer partners, our investors will be investing 365 crores over this period. So it's not a small amount. 365 crores is a big amount to be invested, and that shows our commitment to our customers and to the brand for this great experience.
And as the future becomes electric, can you show us or talk to us about what electric future do you have at this moment? Apart from retail next, well, electric is definitely one of the biggest themes. How are we contributing to it?
Absolutely. Electric is all about sustainability. So actually this format also looks at a lot of sustainable elements in there. And you would see that sustainability is presented in every small way that we do.
All right, well, that was an important conversation coming in from Motown, but it was a blockbuster debut on the Lal Street for Bajaj Housing Finance that listed with a 114% premium on the bourses yesterday and closed even higher at 165 rupees a share. In fact, ET Now's Ankur Mishra spoke to Sanjiv Bajaj, Chairman Bajaj Housing Finance. Let's go across and listen into what he had to say about the company's growth outlook then.
We've had very strong growth, but this is in the background of a very strong, consistently growing economy. And if you look at credit cycles in India, we expect steady credit growth at 12 to 15% in the housing industry. And on the back of that, we are enthused that we can continue to grow strongly. The economy is showing very strong tailwinds, and that's what gives us this comfort. Shareholders should expect a business that grows with high quality, a high level of corporate governance, that brings the right blend of technology in this particular business, and sustainable, sustained growth with high focus on quality of the business and a diversified book is what we look forward to building.
All right, and after this blockbuster debut, let's also get you a view on how the stock can perform going ahead. We caught up with market expert Ravi Darashi. Let's get his opinion on the stock as well as the entire housing space.
In the short run, market would be ending up factoring in a lot of the positives, and it will be difficult to justify these kind of valuation, and earning returns from them over a longer term period becomes difficult. However, there are technical reasons why this overvaluation is happening. With HDFC Limited becoming part of the HDFC fold, there is actually no large mortgage lender separately listed. So that will mean this stock will become a must-own for most of the funds, and it will become part of most of the indices, starting at a 1 lakh crore plus kind of a market cap. It will become part of the large cap indices, and it will all the foreign funds will also look to buy into that. So from that perspective, I can understand why it is happening, but at the same time, I mean it becomes very difficult to generate outsized returns from these valuations going forward.
All right, well, that was the word coming in from Ravi Darashi. Moving on then, let's take a look at the FMCG space, because that has really been in the spotlight. Will HUL be able to grow in line with India's GDP? In the biggest interview of the day, yesterday we caught up with former chairman and CEO of HUL, Sanjiv Mehta. Let's go across and listen in to his views on HUL's growth story then.
There is no other company in India, FMCG, which even comes close to 30,000 crore. You know, we forget US will never grow at India's level. Yeah? But when US grows at that scale, a $25 trillion economy, at 2%, it adds significantly more than what you would be adding at 6% on a $4 trillion economy. Yeah. I'll give you another example. This is something which often people would, my last year, which was the fiscal year ending March 23, HUL added 8,000 crores as a delta turnover in the last year.
Which is almost what Patanjali had 3 years ago.
8,000 crores in India would be called a good-sized FMCG company. Yeah, we talk about disruption. You add together the total turnover of all the D2C brands, they would struggle to reach 8,000 crores.
So do you see HUL coming back in terms of growth to India's GDP number?
No question.
Okay.
No question. Over the years, running businesses of Unilever for 22 years, I've kind of codified what it takes to make a great company.
Okay.
Yeah. First is the mindset that you bring in, what I call as the growth mindset. In many ways, this is very similar. This codification applies to a nation also. Yeah. So first is the growth mindset. In our 30,000+ crores, we had added 10,000 crores of turnover from categories, excluding acquisitions, which didn't exist before. Yeah, like liquid detergents, like green tea, like fabric conditioners, like premium skincare. So in India, not only have you to straddle the price benefit pyramid, but you also have to invest in market development, creating categories of the future. Yeah. The second axis of my troika of a high-performing company are distinctive capabilities which are hard to replicate.
Okay.
Let me pick 2 great examples. First is winning in many Indias. Winning in many Indias is looking at India from a very different lens. It is about, at its core, it is about de-averaging India, but very importantly, understanding the heterogeneity of Indian consumers. The tastes are different, the palate is different, the customs are different, the competitors are different, the per capita consumptions are different. Averaging India is a sin.
So clearly, under Sanjiv Mehta's visionary leadership, the conglomerate has seen many milestones. The entire interview is available on our social media channels, and you keep watching it on ET Now also whole day. We'll stay for a short break here. More to come on the other side of the break. We get you stories and the stocks that you need to know before the trading day today. Don't go anywhere. Welcome back. You're watching Market Cafe on ET Now. And now let's go across to my colleague Gaurav, who has the list of brokerage notes for the day today. Gaurav, over to you. Which all brokerage notes are you highlighting today?
Well, yes. First, let's begin with CGDs because UBS has actually upgraded the target price for a few. So for IGL, they have not only upgraded the rating to buy, but they have also hiked the target price to 700 rupees per share. While for MGL, they have upgraded the target price to 2,400 rupees. What they believe is that there are inorganic growth opportunities for both these companies. Apart from that, infrastructure expansion is likely to drive the volume growth for the companies, and there are potential M&As which are not factored in the price. When we talk about IGL, they have upgraded on the back of the sustainable growth that we may see for the company, and for MGL they are expecting strong volumes growth, and that is the reason why they are being bullish on these companies. Other than that, let's also focus on Adani Green because Investec has now initiated with buy rating and a target price of 2,515 rupees. What they believe is that company is going to achieve sustainable growth in the renewable energy. They can actually clock around 5 times growth when it comes to installed capacity, and on back of this we may see PAT growing at a CAGR of around 60% till FY30. Other than that, they also believe that the company has healthy OCF and strategic capital management, which actually negates the risk of equity dilution. And lastly, let's also focus on Bajaj Housing Finance, the newly listed company, because Phillip Capital initiated with buy rating and a target price of 210 rupees on this company. They say this company is focusing on the desirable sweet spot for many home aspirants. They actually command almost 65% of the home origination segment which they are operating in, and apart from that, they believe that in 3 years we may see this company clocking the balance sheet of around 2 lakh crores, and when it comes to valuation also it is trading at 6.5 times, which actually looks attractive for Phillip Capital. So definitely watching out on all these companies on the back of the brokerage note that we have received today.
There you have it. So those are the list of counters that make it to brokerage radar this morning. IndusInd Bank and Coforge will also be in focus in today's trading session on the back of its management meet. Then Citi has maintained a buy on IndusInd Bank and a sell on Coforge. So tell us a little more about the rationale behind this as well.
Well, yes, Citi went with the management of a few companies, and let's begin with IndusInd Bank. Now, what bank is saying is that the collection prioritization is going to be there in MFI segment given that the risk is rising. Apart from that, vehicle financing disbursement may pick up because of elections are over now. But when we talk about overall loan growth, now they believe that we may see some lag in the guidance in the near term, at least in terms of loan growth. Other than that, they also believe that there is upward pressure in the deposit cost, and lastly, the company is also growing in the lower yielding segment, which may put some pressure on net interest margins as well. There may be corporate slippages which will be contained, and other than that, when we talk about some position in interest rate, now management believes that the bank is actually favorably positioned when the interest rate cut happens. Other than that, they also believe that the LCR impact is going to be in a high single digit, and on the MD and CEO reappointment, they say that the board will send recommendations before time. And on back of this, now Citi has maintained buy rating with the target price of 2010 rupees. And other than that, when we talk about Coforge, now the Citi has now maintained sell rating and a target price of 5,885 rupees, because what they say is that the key discussion remained on demand outlook, order book, Signite acquisition and margin trajectory. When we talk about management, now they have reiterated their focus on demand. They say that the demand is bottomed out and now they will see some slow pickup from here on. Apart from that, management was very strong that ex ESOP, the margins will be healthy. In fact, when we talk about Q2, they say that ESOP cost was lower, and that is why we may see some margin accretion happening. And they also reiterated that guidance then in first half of FY25, we may see the margin inclination of around 50 basis points. So definitely watching out on both these companies on the back of the commentary that we have received from the management.
All right, some interesting comments coming in from Citi on IndusInd Bank as well as Coforge. But there are a lot of action as far as CLSA meet is concerned. CLSA met over 25 investors during their Asia marketing trip over the past 2 weeks, and they found low investor interest in Indian banks, similar to UK as well as US roadshow. Varun joins in with more on this finding and the rationale behind the low sentiment for banks. Varun, over to you. What were the findings?
Definitely. As you said that they have met around 25 investors across Asia, and the feeler that they get is the investor interest in Indian banks is very low. And the main reason for this is what investors say is the EPS growth. Actually, if you look at that, it is very weak, and investor would prefer stocks which have better growth visibility rather than a weak EPS growth. For banks, the base becomes favorable in Q4 FY25 or Q1 FY26, and that is the time when investors would look back at around Indian banks. Most of the investors were unexcited about HDFC Bank, although they preferred IndusInd Bank more because of the underperformance of the stock in the recent past of late, and also they think that the sensitivity to rate cut is more for IndusInd Bank rather than to HDFC Bank. Other than IndusInd Bank, one more company which investors were incrementally confident was Bajaj Finance. So investors are not much confident about Indian banks, but IndusInd Bank and Bajaj Finance, these are the two companies which are there on their radar.
Those are the two companies that make it to their radar, but let's also get to the list of stocks that you should keep on your radar bright and early this morning, and Ria is standing by with that list. Ria?
Yes, good morning. So let's take a look at the stocks that are going to be in focus today. First up, we have SpiceJet, for which the QIP has opened yesterday. Now they are going to raise up to rupees 3,000 crores at a floor price of rupees 64.79 per share, which is a 16.7% discount to the current market price. We're also keeping an eye out on TVS Motors, since they have launched the TVS Apache RR310, which is its flagship offering in the super premium sports motorcycle category. Now they have crafted this from a record-breaking race machine, and this has been launched with segment-leading technologies, and this motorcycle is going to be available in 2 variants and will offer 3 build-to-order customization options as well. We're also keeping an eye out on Torrent Power, since the company has entered into an MOU with the government of Gujarat for the execution of a 5 gigawatt solar wind or solar wind hybrid project at the Dwarka district in Gujarat. Vedanta is also in focus today, since they have issued a clarification saying that there has been no disruption to the aluminum refinery operations after the facility was flooded on Sunday. Let's shift focus though to Edelweiss, financial services where a big block deal has happened. So Edelweiss Employees Welfare Trust has sold 27.5 lakh shares at rupees 124, and White Oak Capital Asset Management has bought the same amount of shares at rupees 124. Lastly, the renewable energy stocks are going to be in focus today, since the renewable energy secretary said that we can expect about 5 gigawatt of wind capacity additions in FY25, and we can also expect to commission over 30 gigawatts of solar capacity in FY25. Further, they've also said that they can see tendering of more battery-linked renewable storage projects going forward due to the market demand. And lastly, in FY26, we can expect the renewable energy capacity additions to overtake the FY25 capacity. So definitely keeping an eye out on all of these stocks today.
Right, thanks very much, Ria, for all the list of stocks that could be buzzing today in trade. Moving on, news coming in on behalf of JK Tyre. Also, JK Tyre was announced a merger with the subsidiary companies Cavendish Industries, and they would merge into the parent company. The aim is to streamline operations and to consolidate all the related business under one listed entity. Let's understand this arrangement also. Now, how would this arrangement turn out to be? Shareholders of Cavendish, they will get 92 shares of JK Tyre for every 100 shares they hold, as well as now this entire merger is subject to approval from NCLT exchanges and shareholders. Let's not forget that also. So, talking more about the Cavendish, the subsidiary company, it's a key subsidiary of JK Tyre, which produces a large share of JK Tyre's TBR tyres, and this was acquired from Birla Tyres way back in 2016. Operations have improved since the acquisition, and they have also ramped up their operations by nearly 5 times post the acquisition. Revenue, which stands at for the fourth quarter FY24, that is nearly 873 crores, and margin stand at 15.6%. Performance was largely impacted by their EPR provisioning.
Well, absolutely. And let's get you some more news and updates coming in from outside the world of stocks. Then, final meeting between Mamata Banerjee and protesting doctors bears some fruits. Under duress, Chief Minister sacks Kolkata Police Commissioner over the police's handling of the RG Kar Hospital rape and murder, North Kolkata. Deputy Commissioner, Director of Medical Education and Director of Health Services have also been shunted out. Doctors to decide next action after top court hearing today. Moving on then, it will be a day of high political drama in the national capital. Delhi Chief Minister Arvind Kejriwal is all set to step down as the Chief Minister today. AAP Legislative Party meet to decide next Chief Minister. Reports also indicate that Kejriwal's wife Sunita Kejriwal and Delhi Minister Atishi Marlena could be the next Chief Minister. Moving on then, Manipur government lifts ban on internet after 1 week. Schools and colleges to reopen from today. The move comes as the northeastern state breathes easy after days of continuous violence.
And a shocking incident, the Babs Swaminarayan Temple in New York was vandalized by miscreants. The Consulate Journal of India has strongly condemned the vandalization and informed the US law enforcement agencies also for an immediate action against the perpetrators of the heinous act. India, US held, with officials from Ministry of External Affairs and Defense and the US State and Defense, a key meeting which happened. Key discussions covered bilateral, strategic and defense priorities alongside regional and global issues. And nation celebrates Anant Chaturdashi as people brace to bid an emotional farewell to Lord Ganesha as they take a promise from him to come back next year. Team ET now wishes you on this auspicious occasion a very happy Ganesha Chaturdashi.
Alright then, with that, we're completely out of time on this edition of Market Cafe on ET Now. From me, Shreyansi Singh, Priyanka Uppal, as well as the entire team that put this show together. Thank you so much for tuning in. You don't go anywhere because the market takes all of the action forward.
If you like this video, then like, share and subscribe to ET Now.